Meet CoinShares, a company that's changing the way people invest in digital currencies, making it as straightforward as buying a stock or an ETF. In a world where crypto can seem complicated and intimidating, CoinShares aims to simplify the process, opening the doors for both seasoned investors and newcomers alike. Founded back in 2013, CoinShares has steadily grown to become Europe's largest digital asset investment firm. Over the years, they've built a reputation for trust and innovation, managing billions of dollars for clients all around the globe. Their expertise and forward-thinking approach have helped them stand out in a rapidly evolving industry. With offices in France, Sweden, the UK, and the US, CoinShares operates on a truly international scale. Their global presence allows them to bridge the gap between traditional finance and the fast-paced, ever-changing world of crypto. By connecting these two worlds, they make digital assets more accessible to mainstream investors. As of September 2025, CoinShares managed an impressive $10 billion in assets, making them one of the top players worldwide. In fact, they ranked fourth globally for digital asset products, a testament to their scale and influence in the market. Their growth reflects the increasing demand for secure, regulated ways to invest in crypto. One of CoinShares' specialties is exchange-traded products, or ETPs. These innovative investment vehicles let people track the price of cryptocurrencies like Bitcoin and Ethereum, without the need to directly buy or store the coins themselves. This makes crypto investing more convenient, secure, and familiar for traditional investors. With over a decade of experience, CoinShares has become a bellwether for the industry. When they make a move, the market pays attention. Their decisions often signal broader trends and shifts, influencing how other companies and investors approach digital assets. On November 28, 2025, CoinShares made headlines by unexpectedly withdrawing plans to launch several new crypto products in the US. This move surprised many, as the company had been seen as a leader in bringing innovative products to American investors. The decision sparked intense debate among financial experts and market watchers. Some see it as a sign of regulatory uncertainty in the US, while others believe it reflects the challenges of launching new crypto products in a complex environment. In the fast-moving world of digital assets, even industry giants like CoinShares must stay agile and adapt quickly. Their story is a reminder that innovation and resilience are key to thriving in the ever-changing landscape of crypto finance. To understand CoinShares' big move, let's break down ETFs and see why they matter so much in today's investing world. An ETF, or exchange-traded fund, is like a basket that holds a mix of different assets. These could be stocks, bonds, gold, or even other commodities. Instead of buying each asset individually, you can buy a single ETF share, which gives you a slice of everything inside the basket. ETFs are traded on stock exchanges, just like regular company shares, making them easy to buy and sell throughout the day. Buying an ETF gives you instant diversification, which means your investment risk is spread out across many assets. This makes investing simpler, especially for beginners, and helps protect you if one asset in the basket doesn't perform well. It's a popular way to build a balanced portfolio without needing to be an expert in every market. Now imagine a crypto ETF. Instead of traditional assets like stocks or bonds, this special ETF holds cryptocurrencies such as Bitcoin, Ethereum, or XRP. It's a new way to get exposure to the fast-growing world of digital currencies, all within a familiar investment structure. With a crypto ETF, you don't need to set up a digital wallet, manage private keys, or worry about the technical side of crypto security. You simply invest through your regular brokerage account, just like you would with any other stock or ETF. Crypto ETFs make digital assets more accessible and regulated, since they trade on established exchanges under strict oversight. This gives investors peace of mind and brings more legitimacy to the crypto market. If the price of the underlying cryptocurrency rises, the value of your ETF shares goes up too. You benefit from the growth of digital assets, but with the convenience and safety of traditional investing. This convenience and simplicity are why new crypto ETFs always generate so much excitement and media buzz. They make it possible for everyday investors to join the crypto revolution without needing to be tech experts. By lowering the barriers to entry, crypto ETFs open the door for millions of people to invest in digital currencies, even if they've never owned crypto before. It's a game changer for mainstream adoption. That's why CoinShares plans to launch a US crypto ETF were so highly anticipated, because they could help bring crypto investing to an even wider audience. CoinShares set its sights on the US, aiming to launch 3 new crypto ETFs. The first, CoinShares XRP ETF, tracking Ripple's popular digital currency used for fast, low-cost global payments. Second, CoinShares Litecoin ETF, offering exposure to one of the oldest and most reliable cryptocurrencies. Third, CoinShares Solana Staking ETF, combining Solana's high-speed blockchain with staking rewards, letting investors earn income, not just price gains. These ETFs promised Americans easy, regulated access to more than just Bitcoin. CoinShares filed with the SEC, and anticipation was high. Investors were eager for these innovative products. For CoinShares, this was a chance to bring their European expertise to the world's biggest financial market. But things didn't go as planned. Just as excitement peaked, CoinShares shocked the market by withdrawing all 3 ETF applications. They also closed an existing Bitcoin futures leveraged ETF. CEO Jean-Marie Mognetti explained, "The U.S. crypto ETF landscape had changed fast. The market was now crowded, dominated by giant firms with deep pockets and ultra-low fees. Competing head-to-head would be like opening a small cafe next to Starbucks." CoinShares realized their original plan no longer made sense. Instead of fighting for scraps, they chose to rethink their U.S. strategy. This pivot wasn't a retreat. It was a calculated move to seek smarter opportunities. Sometimes the boldest move is knowing when to change course. CoinShares decided to step back and innovate, rather than get lost in the crowd. The U.S. crypto ETF market quickly turned into a fierce battleground, as major financial institutions and asset managers raced to launch new products for every major cryptocurrency. The competition was relentless, with each firm trying to outdo the others in speed, innovation, and marketing reach. The stakes were high, and the pressure to capture investor attention was intense. By late 2025, industry giants like Grayscale, Bitwise, and Franklin Templeton had already rolled out XRP ETFs, collectively amassing over $800 million in assets under management. These launches were headline news, signaling that the market was maturing rapidly and attracting significant capital from both retail and institutional investors. But with so many nearly identical products flooding the market, companies were forced to slash management fees to the bone just to stay competitive. For investors, this fee war was a win. Lower costs meant better returns. But for the firms themselves, it created a brutal environment where profits were squeezed to the minimum. CoinShares realized that entering the market at this stage would mean facing sky-high marketing expenses and razor-thin profit margins. The cost of acquiring new customers was rising, while the potential rewards were shrinking. It's a lot like the smartphone market. Once a handful of brands dominate, it becomes nearly impossible for newcomers to stand out or make meaningful profits. The products start to look the same, and price becomes the only differentiator. In such a crowded field, the opportunity for sustainable growth shrinks dramatically. The market becomes saturated, and only the biggest players with the deepest pockets can afford to stay in the game. CoinShares leadership recognized the significant risk of chasing after low-margin business just for the sake of being present. They understood that not every opportunity is worth pursuing, especially when the odds are stacked against long-term success. Instead, they made a strategic decision to focus their energy and resources on areas where there was real potential for innovation, differentiation, and sustainable profit. They looked for markets where they could truly add value and stand out from the crowd. Their withdrawal from the crowded ETF race wasn't a sign of defeat. It was a calculated move, all about smart resource allocation and long-term vision. Sometimes the wisest business move is knowing when not to play and having the discipline to walk away so you can win elsewhere. CoinShares isn't leaving the US, they're just changing tactics. Their new focus? Specialized higher-margin products that set them apart. First, crypto equity exposure vehicles. Funds investing in companies powering the crypto industry, not just coins. Next, thematic baskets. Collections of assets built around trends like DeFi or the metaverse. Finally, actively managed strategies, where experts adjust holdings to maximize returns and manage risk. These products offer more than just tracking a coin's price. They give investors targeted, diversified exposure. By avoiding crowded markets, CoinShares aims to deliver unique value to American investors. The goal: lead with innovation, not imitation. CoinShares' U.S. strategy is also shaped by its plan to go public on the Nasdaq. To do this, they're merging with Vine Hill Capital, a SPAC, in a $1.2 billion deal. Listing on NASDAQ means more visibility, access to U.S. investors, and higher expectations for growth and profitability. This context explains their careful approach. Public shareholders want smart, profitable moves, not risky ventures. Launching low-margin ETFs could have hurt their story as a newly public company. Instead, CoinShares is positioning itself as an innovator in digital asset investing. Their NASDAQ listing is the next big step, and their new product strategy is designed to impress. It's about building a compelling growth story for the future. What does all this mean for you? The U.S. crypto investment market is maturing. Competition has driven down fees on basic products like Bitcoin ETFs. For simple, low-cost exposure, investors now have plenty of choices. But the next wave is about specialization. Thematic baskets, crypto-related stocks, and actively managed funds. These new products offer more ways to invest in trends you believe in, but require more research and understanding. The market is moving beyond one-size-fits-all, giving you more tools to build a portfolio that fits your goals. CoinShares pivot signals a more sophisticated, diverse era for crypto investing. More choice, more power, if you're willing to learn. CoinShares pivot is a lesson for all crypto investors. The industry changes fast, and strategies must evolve. Don't just follow the crowd. Know your goals and risk tolerance. As new products emerge, take time to understand what you're investing in. Start small, learn as you go, and don't be afraid to adjust your approach. The digital asset world offers huge opportunities, but also unique risks and volatility. The market is maturing, offering more choices and better products than ever before. CoinShares' move shows the value of adaptability and innovation. Stay curious, stay informed, and make decisions that fit your journey. In crypto, being a lifelong learner is your best investment.